Hello, hello, hello. What's going on, everybody? Welcome to Stock Trades. How's everybody doing today? All right, ladies and gentlemen, we're going to go ahead and just kick this off and talk about a couple things. So, in the title, literally kind of a little overwhelming, right? Clove collapse. Is this the end? Has the sky fallen? So, I've been receiving lots of comments, lots of comments. Um, Either they're trolls or there's just people when the things become dark, the NPCs start to come out, right? So these are potentially not just non-player characters that just come out of the woodworks. Whenever a stock basically falls, you get these NPCs come out, which is great because we need them, because these are the types of people that are dumb enough to short the market. So we're gonna go ahead and just kind of talk about this real quick here. So we had a drop here before, back in August 21. We had a 28% drop, and then we had a bunch of non-player characters come online and get upset, and from there we had a run up from 250 on to here, a 61% run up, and then we had another drop, another 11 to 12% drop in October, and then we had another 15% run, and then now we're having this drop, a 21.61% drop, less than the drop we had here, which is a 28.6%. Okay, so definitely lots is going on, and interestingly, the drop that we're having now, we're having these non-player characters coming out of the woodwork saying this is not a good company. But then if you look at the most recent analyst reports, they're coming out with price target increases from $2 to $4.50 from Leerings, and $3.20 to $4.20. And we got another price target increase to $4 from UBS. So it's just interesting how, like, all of a sudden now you're starting to see a dichotomy. And it's so sad because these people are retail investors, or maybe they're not retail investors. Maybe there's people out there that are just trying to short the market. But yet again, the beautiful part about having a channel where we basically talk about fundamentals and doing an intrinsic value calculation and actually speak from a purpose of being data driven, we have a way to basically combat whatever this amygdala associated emotional responses, and we can actually break things down to first principles and create something of value here, which is what we created in the Al Stock Trades platform, right? So I hope that this is what I'm saying is nothing new, but ultimately a way to just kind of gather all this that's happened and actually break it down and have some form of principles, some form of all right principles that we can go through to where we can make some form of sophisticated decision. Now, remember, this is, I'm not a financial advisor, so make sure you take everything I say as a grain of salt. But if there's one thing you take away, is that please take away the ability to think for yourself, the ability to use your own frontal lobe that's cephalized and well myelinated to make your own decisions, but utilizing data-driven approaches. So with this, wanted to say, Audrey says she's the first. So how you doing, Audrey? And how you doing, Starbucks? Right? It's the end. Sell everything so I can buy it at a bargain price. Oh Lord, right? Sunday fun day, Sunday special. He'll end Medicare and Medicaid. Oh yeah, that's not right. Right? He's not going to end Medicare Advantage. Right? Medicare Advantage. Right? Yeah, you said it right. Let's see, Ken. You're starting to make a lot of sense. As price of stock goes up, analyst projections go up. It's magic. Exactly, right? Crazy to think the stock was 62 cents, made a run to 430. Why are we freaking out? People hold this stock are way too much. Well, that's what I'm saying, Justin Jones. It's because these people don't have principles. They don't have guiding principles. Because it's just I honestly don't know, because it's hard for someone like myself that regimens everything through a mathematical model and everything I do to understand when people make these sorts of things. And, but it's okay, because this is what gives people like us that are mathematically modeled, that are data driven, an opportunity called alpha, which is the percentage made above the normal market returns that an S&P 500 ETF brings, right? So it's actually pretty good for us, people like us, right? So ultimately, take it as a rewarding factor. But what I would like to do is just kind of address it, just in case people out there, they're listening, right? So discipline, right? It takes discipline and patience. This is why most people are poor. They don't have that discipline, right? And also there's other ranges as well, such as systematic inaccessibilities to proper educational material, and a lot of things that unfortunately lead to folks that have disadvantages. But again, we're trying to basically decrease these gaps and really try to make things a little bit more worthwhile here. Okay. So in this regards, we're going to go ahead and do an intrinsic value. Remember, this intrinsic value, when we put the numbers for Clover Health regarding the numbers of where it's growing at now, it's the price that we're expecting it to be at today's value versus what it's going to be in 10 years. The only time I do make a 5 to 10 year projection is when I put a revenue growth rate that's basically higher than that of what it's basically growing at. So if I put 15%, 25%, 30%, 40%, 50%, that is what I'm expecting in the future, because they're not growing at that right now, because that's not reality. That's a fake reality. This is called speculation. But when I put 9.33%, I'm taking 8% plus 9% plus 11% and dividing by 3, which gets me 9.33%. Okay. So it's all pretty much driven here, mathematical model, right? So let's open up our intrinsic value calculation. And again, my recommendation for folks that didn't understand that, repeat the video a couple times until you do, because it's a very fairly important concept, right? So ultimately, for folks that want access to our platform, we are going to have a Black Friday sale. So just kind of stay tuned for that, right? And it'll be a really great opportunity to come in and come online and join our platform. Again, I'm very excited. From that first survey, we had around $55.3 million essentially of worth in our platform. And I'm just so proud of creating a group of just highly educated and motivated people that want something different from life, that know that it takes a group, a team, to basically go from zero to hero. And it's hard to do it alone. But if we do it together, we do things very magically. And to all the lifetime members, if you saw today in the chat group, there are some associated perks that come with lifetime. Like, for example, all the resources that I have, you will have, such as golf courses and spas and whatnot that are that are part of the family jewels, right? So those are going to be integrated within that, because at the end of the day, I'm trying to create a lifetime group community that is going to last more than 10, 20, 30 years, right? Because that's what it's going to take to do extraordinary things, because it's hard to go to a bar and speak about these things. It's hard to find someone, your coworker, for the doctors out there, and talk about these things, because there's a taboo in talking about money. There's a taboo about these things. But with our group, there's no taboos. It's all free speech. We all come together and we talk because we want to better ourselves. This is exactly what the rich do. They go to these golf courses and they talk about these things. They make business deals, sign hands, shake hands, and throw hands. They do all of these different types of things, right? And it's a shame, because people like us, we don't have this. We don't have these resources, but now we do. Now we do, and we have it together. Okay. So let's go ahead and just look at the comment section real quick. Up 500%, all good. Down 20%, time to sell. And then you have the clown face. I mean, honestly, B-Rob, I mean, this is just I'm just trying to, you know what this tells me? The people that are talking like this, they're not real people. I think personally, and you can see the short volumes increasing, this is what I think it is, because I inherently think people are not this ignorant, right? They cannot be, right? I truly believe that the people that are commenting on the YouTube channel right now, we got an increase of these comments. It correlates with the increase of the short volume, which you can essentially track within our stock terminal. You go ahead, look at the short. Let's just basically have the data. Instead of all talk, let's go ahead and freaking show it, right? You open up the short volume, type in Clover Health, which is the ticker, and you can basically see, as soon as the stock price started dropping, you can see that the short volume, you see these bars going up. And then if you calculate the bars with the comment sections associated with what we've been getting on YouTube, I personally think the people that are shorting the stock, because they know who we are. I mean, you type in Clover Health and you go ahead and look at images, who you're going to find? You're going to find me, right? And I think that they know where people get this information from in terms of, as educational platform. And what they're doing is they're going on this platform, and they're commenting. And we've already had one person who actually paid to be on. And actually, I remember the comments for all the lifetime members, and they were basically telling all these weird things that are happening. I think these people are shorting the stock, and what they're doing is they're trying to create uncertainty. Even though we got free cash flow positive of $49 million of free cash flow in Q3, up from negative 20 million of Q3 of 2023. Let me respond to a comment. One comment said, "I don't care about last year's Q3. I'm comparing it to Q2." I'm sorry, but Wall Street doesn't do that. And if you don't care, then it's like basically saying, I don't like water and I don't care about water. Okay, well, your body runs on water. This is a systematic way of the, security analysis. And I think you need to go ahead and just really slow down and just kind of focus on why we look at Q3 to Q3 from 2023 to 2024. The reason being is there are different market cycles. Clover Health in the fourth quarter is different than Quarter Health in the third. Sorry, Clover Health in the fourth quarter is different than Clover Health in the third quarter because of what happens in each quarter in terms of getting patients enrolled, getting, all these things. Every quarter has a different business cycle. And, there's a lot of education that you must fill within yourself. And not even I have all the answers. And I'm telling you, I'm a lifelong learner. I'm a lifelong learner. Okay. So, anywho, let's go to the next comment real quick here. I was up 200. I'm up 17. I'm not worried though. This dip, I was able to add a few more shares. There it is, Chrissy, right? Thank you for sharing. And again, I love the community here, right? Because, what else do we have? You know what I mean? It's community is all we got, right? So will they provide coverage in more states at some point? They're only available in like 7 states, right? That'll be huge. So if you actually go to their quarterly earnings report from the one that just basically released, Andrew Toy said they're going to turn on the growth phase in 2025. So I'm expecting some form of growth phase. So we'll see when that comes. B-Rad, what's going on? Came in at the right time, numbers crunching time. Let's go. Hell, absolutely. Yo, Al, I love you, bro. You are one in a billion, and so are you. I appreciate the testimonial video you provided. Thank you so much, and thank you for just being part of the community, because it means a lot, right? So they are pretty much in one state, New Jersey. They have very little going on anywhere else, but that should change. They claim 11 states. Exactly. 2 cents analyst upgrades. Funny how that works. Exact. 2 recent analyst upgrades. And exactly, right? So now let's go ahead and just really quickly type in that 9.33, go 10 years. And then if you don't recall, I punched and made a couple of things that I would like to talk about. One is the free cash flow thing. If I can find this. So as you can see here, ladies and gentlemen, this is the free cash flow from Q1, Q2, Q3, and Q4 of the year 2023, which is last year, because this year is 2024, right? Then you have 2024 Q1, 2, and 3. So if you compare Q3 from last year's Q3, it went from negative 20 million to 49. This is very, very good. It means that it gives me positive that we may actually be free cash flow positive this year. Now, Q4 is bad last year, and I think that has to do with ACO. I think Q4, this next one, will probably be anywhere between $0 to $10 million. But ultimately, because of that negative 39 million that needs to go to ACO. But ultimately, I'm very happy with these numbers. These are beautiful numbers. So let's go ahead and crunch these numbers. 25 plus, was it 44, right? 44 plus 49. That's 118. You put 118 here. I mean, come on, guys. Remember we used to put 69, right? It's 118. And then we go ahead and put 496. And we get, anywhere between $3.78 to $5.15. Guys, I'm really excited. This is at 9.33. And then I think a good number is 25 million. There's $16. And then we go ahead and add another 44 million for next year for 2025 to this. That's 162. 162. Guys, I'm expecting anywhere between 11 to $22 next year, right? If we want to go ahead and cut it in half, we can cut it in half. $6 to $11 next year, right? Anywhere between, if you really want to just kind of get the ultimate range, the bear case would be $6 to $11, and then the bullish case would be $11 to $22. Regardless, I'm looking at anywhere between $6 and $22 next year, right? And if it doesn't happen, then that's fine. But ultimately, that's what I'm seeing, and definitely that is going to happen. I think by the next 2 years. Not financial advice, just what I'm thinking, right? Just from an educational perspective, right? So smart money is going ahead and going down, but dumb money's kicking back up. So we may essentially start riding with stocks. Interestingly, though, we're starting to increase that put call ratio. So potentially we may start seeing stocks go down. And remember, when stocks during the 2020 pandemic went down, the put call ratio is up. And remember, this is a contrarian indicator that's mathematically calculated. So whenever people want to buy puts, it's the best time to buy. But whenever people want to buy calls, it's the worst time to buy because it's a top. So ultimately now we're removing from the fact that people were extremely bullish with calls, and now they're slowly racking up the puts. Now this coincides with institutional investors suggesting that potentially middle to middle end of November, we're expecting some form of a dip, and then a year-end market rally for that Santa Claus rally. Regardless of what happens, the long term is always good. Okay, and that's what I think, right? But yeah, guys, that's pretty much what I have. I mean, this is not rocket science, right? There's nothing hard about this, right? Let's go ahead and do a Monte Carlo real quick. Let's do a Monte Carlo simulation here, and let's see kind of where we're at. So Monte Carlo wise, I mean, this blue thing is literally this white thing is near the green thing is suggesting that, we're going to be pretty bullish, right? So I'm very excited for this. I'm very excited, and we're going to see kind of where we're at. Let's go ahead and let's see the comment sections real quick. Small caps just got lit. Okay. So, and that's what happens. So if you go to our research edge, I'm not going to put it on YouTube because that's essentially for our paid members. But if you go to Research Edge, you'll see some of the due diligence that we did in regards to what you're saying, Master the Chin, right? But let's go ahead and go to Yahoo Finance real quick. And you can see here, small caps are going up right now, right? For some reason, they're not giving the percentage. Oh, it's down here. I just don't know how to read this thing, right? So you can see small caps are, 0.74, which is higher than the rest that's going up, right? I like the old way of doing things. I don't know why they're doing that. It's so important to note that these estimates have nothing to do with SaaS. This can easily be the most undervalued healthcare stock of the generation. Don't miss the boot. Well, that's the thing. We're not talking SaaS here because I'm just talking about the numbers they're giving us. If it was a SaaS thing, okay, let me just show you what SaaS can do, right? This is Palantir, okay? This is Palantir right now. It's going to be $60. It's a $130 billion business. Guys, this is very exciting because if Clover can activate that SaaS revenue and that Counterpart Assistant can give you this multiple millions of dollars, holy freaking moly. All of you guys, your jaws are about to drop by a magnitude of 10 if we see this type of movement, right? But again, I will let Andrew Toy, the only computer scientist running a healthcare company in the United States, speak for his own company. And we're going to go ahead and see what happens, right? All right, B-Rad. I'm looking forward for the, CMS enrollment numbers getting posted in 2025. Club has the opportunity to pick up some new members. Exactly. Now, let me just go ahead. We have someone in who's part of the New Jersey market who essentially is signing up these folks. And we have someone who's in the industry, and they're saying that they are seeing record signups like they have not seen before. People are flocking to Clover Health like people have not seen before. And I'm just going to let the numbers speak for themselves because I don't know what they are, but I can, just utilizing first principles and a little bit of common sense, which sadly ain't so common, I expect the numbers are going to be pretty damn good. Wall Street wants to buy Main Street shares. Well, that's pretty much what it always comes down to. Look what happened to Tesla, Enphase, and Palantir, right? February 2025 enrollment numbers. The SaaS fall under other income. Yeah, I need to look at it a little bit more deeply. I'm not too sure. Al, every time you release these videos on the channel, I get that FOMO feeling. Well, it's good to not do that, but it's good to get excited, right? Because this is what I'm looking at. Because again, I'm excited, but again, educational perspective, take everything I say as a grain of salt. But ultimately, I'm excited, right? Also, May earnings will be Q1 2025 with hopeful increase in membership counts. Exactly, right? That's what I'm looking forward to. Think of this stock dip like a clearance sale at your favorite big box store, an opportunity to snag great value before prices go back up. I mean, just great kind of thing. I always like to say, if you like your favorite t-shirt and it goes on sale, you're not going to dump your t-shirt and say it's garbage. Well, that's what people do when it comes to Wall Street, right? When do the numbers get posted? February 2025 were officially posted. Do you have an ETA on 2024 open enrollment will be released? Thank you, thank you, thank you. All right, well, there it is, guys. I mean, I have to look at it, not on top of my head, but I'm very excited. I'm very excited. All right, guys, love you a lot, and I'm gonna go ahead and pack up here. And just wanted to say thank you for joining. Thank you for joining the channel. Right? If you haven't done so, hit that subscribe button. Right? Throw us a like. It helps with the YouTube algorithm. Right? And for folks that are interested in the Al Stock Trades Lifetime Access Plan, be on the lookout for the Black Friday sale. Again, guys, we're trying to create a community. That the thing is, getting access to the data is hard, and you need access to this type of data, and to essentially understand how to interpret the data to figure out how to make money from a value investing perspective on Wall Street, right? And the beautiful part is, as people lost money last week, people in our stock terminal, we were making money because we utilized people's fear of the stock falling to do cash secured puts, right? And covered calls. And we were making a fortune. We were making 10% per month compounded. Okay. That means 2 months you'll make 20%. 3 months you make 30%. This is the time to do it. We are milking the options chain using the wheel strategy. And I'm calling out every options move I'm doing. I'm calling it out on the options edge analysis form from an educational perspective. We are kicking butt, and we're going to do it together. And we're going to go ahead and democratize financial literacy for all people around the world. God bless you guys, and I'll see you on the next one.